Hi, everybody. Thanks for watching. We're going to talk about one of my favorite stocks in one of the worst performing sectors in the market. Before we do, please click subscribe to my channel to keep up with all of my latest investing and personal finance content. And please check out the link on your screen for a message from our sponsor, The Motley Fool, where you can get the 10 best stocks to buy right now for free. So, I want to talk about a stock that's in a sector that's really fallen out of favor, and that is offices. It's no secret that remote work has really, gained traction as a result of the COVID pandemic. It continues to do so. And as a result, a lot of people are justifiably concerned about the office industry. Now, there are some signs that the offices aren't performing that well. A lot of, especially in kind of secondary markets, where there is just an abundance of office space, and quite frankly, not a ton of companies that need a physical presence. So one exception that I think is kind of a multi-bagger stock just hiding in plain sight is a company called Empire State Realty Trust, ticker symbol ESRT. Now, this is a company that I've written about several times, so you might have heard me talk about it. It's a real estate investment trust. They focus on office properties in the greater Manhattan area, and their iconic property is the Empire State Building. They own the Empire State Building. They own about a dozen other properties, mostly in Manhattan, but some in the surrounding areas. And unlike a lot of other office companies, the numbers are actually really heading in the right direction here. So, first of all, you can see most of their income comes from their office properties. They also have a small amount of freestanding retail. They also have they recently purchased two residential properties, and they get a lot of income from the observatory at the top of the Empire State Building. It's really important to appreciate what just a cash machine business this is that most office REITs don't have. It makes up something like 2% of the company's total square footage, and you can see how much of its income, 19% in the past 4 quarters or past 3 quarters that come from the observatory. And that's at a time when international travel isn't what it was pre-pandemic. So a lot of money flows through that observatory, and it's a big differentiator for the stock. But just with its offices, it might surprise people to learn that its office portfolio, or its overall commercial property portfolio, is 88.5% leased. That's a 200 basis point gain from a year ago. So unlike a lot of office landlords who are seeing occupancy rise, Empire State's actually leasing up its properties at a pretty impressive rate. It signed over 335,000 square feet of leases during the second quarter or during the third quarter alone, and its numbers are really trending in the right direction. The observatory is doing well. Visitation is about two-thirds of what it was pre-COVID, and the biggest reason is that international travel hasn't really rebounded as quickly as we would have liked. But having said that, the company's doing a great job of increasing revenue on a per capita basis. The average person who visits the Empire State Observatory spends 40% more than they did in pre-COVID times in comparable 2019 periods. So they're doing a great job of monetizing. They recently completed a massive renovation of the space up there, and it looks like it's really paying off. And as travel continues to normalize, it could be a big tailwind for the stock. But its offices enough are reason enough to buy. It's trading at a big discount to net asset value. Great balance sheet is another big differentiator. You can see on your screen how various debt metrics compare to Empire State's peers. It has $387 million of cash on its balance sheet, another 95 million coming from a pending sale of a couple of non-core properties, and has an untapped $850 million credit line, a total of over $1.2 billion of liquidity, which is a lot for a company that has a market cap of less than $2 billion. So a lot of money to kind of capitalize on opportunities as they see fit, especially in the Manhattan market. If they find, an office property that they perceive to be on sale, they have the money to pursue it. It's a profitable business. It trades for just about 8 times forward earnings or funds from operations, which is kind of the real estate version of earnings, trading at a fire sale valuation because of the pessimism in the office space, despite the numbers telling a completely different story. The company has been buying back shares aggressively for the first time in its publicly traded history since COVID hit, and which really just kind of indicates that management thinks that it is a bargain right now. I couldn't agree more. It's one of the largest holdings in my own portfolio and one that I plan to continue to build over time, especially at these price levels. Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by The Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.